Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. March retail sales data rose by 1.4% month-on-month, in line with expectations and higher than the 0.2% month-on-month growth recorded in February. The S&P Global US Manufacturing PMI for April will be released this week and is expected to enter the contraction phase at 49.3, compared to the expansionary reading of 50.2 in March. US President Donald Trump has signaled a potential pause in tariff hikes against China, citing concerns over consumer spending. While tariffs on Chinese goods have reached as high as 145%, both sides appear reluctant to escalate further, with China stating it will not engage in a numbers game. Trump also noted that the TikTok divestment deal will be delayed until broader trade issues are resolved. Eurozone. The European Central Bank has cut its interest benchmark for the third time in 2025, lowering it by 25 basis points amid concerns over the Eurozone's economic growth outlook during a period of uncertainty surrounding global trade and tariffs. China Zone. The yuan has come under pressure due to rising trade tensions between Beijing and Washington. The People's Bank of China kept its loan prime rate unchanged at 3.1% for one-year loan maturities and 3.6% for five-year loan maturities, in line with market expectations. Indonesia Zone. Indonesia's foreign exchange reserves in March rose to $157.1 billion, up from $154.5 billion from February. The Consumer Confidence Index in March remained in the optimism phase above 100, recorded at 121.1, although it declined from 126.4 in February. The March trade balance is expected to post a surplus of $2.87 billion, lower than the $3.12 billion surplus recorded in February. Bank Indonesia is scheduled to hold a policy meeting this week, with the market widely expecting no rate cut at this meeting. Market View. The Jakarta Composite Index JCI increased by 2.81% week-on-week, closing at 6,438.269. This week, domestic data may provide support for the JCI to stay in positive territory, such as the expected trade surplus in March and the policy rate, which is likely to remain unchanged. On the global front, particularly from the US, external pressures are expected to ease as the US appears to be pausing further tariff hikes on Chinese products. Foreign investors recorded a net sell of 13.90 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 49.57 trillion Indonesian rupiah. The three best-performing sectors on a weekly basis were basic materials, infrastructure and energy, which rose by 10.47%, 7.21%, and 5.60% respectively. On April 17, 2025, Indonesia's bond market recorded a decline in the 5-year benchmark yield FR0104 to 6.78%, while the 10-year yields FR0103 also fell to 6.91%. Yield on the longer dated tenors 15-year FR0106 and 20-year FR0107 remained stable at 7.05% and 7.04% respectively. Meanwhile, the yield on a 10-year Indon bond Indon 34 declined to 5.32% and the yield on a 10-year US Treasury fell to 4.33%, down from the respective levels of 5.52% and 4.49% on March 11, 2025. Indonesia's risk premium, as reflected by the 5-year CDS, also declined to 108.24 basis points. Additionally, the rupiah depreciated by 0.18% week-on-week, weakening to 16,825 US dollars Indonesian rupiah. As of April 16, 2025, Foreign ownership in the government bond market stood at 886.27 trillion Indonesian rupiah, 14.23% of the total outstanding, down from 887.56 trillion Indonesian rupiah, 14.25% of the total outstanding on April 11, 2025. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, after lowering the benchmark interest rate by 100 basis points in 2024. The U.S. economy remains on track for a soft landing, with growth projected at 1.7% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.